So in this video, I want to touch on some topics that pertain to Tesla stock, but as well as the overall market, such as the S&P 500. Now, this video is going to differ from my typical videos in the sense that it's going to be much more abridged. For example, if we take a look, we still see that we have approximately about 1 hour before the market closes. Typically, when I do these videos, I wait until the bell rings after the close of the day, simply because I like to wait to garner as much data as I possibly can. This way I provide a better overall synopsis of what's recently taken place with the overall markets, right? And I do this in regards with Tesla stock and what economic data we've recently gotten. However, today is unique in the sense that it is my anniversary with my girlfriend, so of course things had to get rearranged. But enough of that. I want to go ahead and get straight into it, right? So I want to share something with you guys. So today at 9:01 a.m., I shared exclusively with the Push and Profit private group this message, which is just a snippet of what I said. But I mentioned that the markets experienced a slight uptick yesterday, yet they've been on a downward trend for 4 of the past 5 trading sessions. Despite yesterday's positive move, there was no compelling indication that this month's lows have been reached. The S&P 500 still lingers significantly below last week's drop, falling under 4,550, right? I also said, considering current possibilities and the sustained high level of the 10-year Treasury yields and the US dollar, a prudent approach suggests a potential continued market softness, at least until the CPI releases on Thursday. Right, so that's something I mentioned this morning to the Push and Profit private group. Now, what did we see? Well, we saw that in the beginning of today's trading session, we still did indeed see a continued amount of selling pressure, right? Some weakness and softness in the market. Yet around 12, exactly about the middle of the day, we saw that Tesla, or the overall markets, including Tesla and the S&P 500, started rallying up. So I'm going to go ahead and touch on that. But before we go ahead and talk about that, I want to highlight something that I've been telling the Push and Profit private group in regards to the Federal Reserve. So I've said that the Federal Reserve is significantly off track with the shadow of a potential recession looming large. However, there's emerging dissent amongst its members. For example, John C. Williams, who serves as the president of the New York Fed, and remember, he holds the position of vice chair and a permanent voting member of the Fed, he voiced yesterday that persistent falling prices pose a risk of over tightening. Now, this is interesting because this is something that I've been saying publicly on YouTube, but as well to the Push and Profit private group, that in regards to the monetary policy that the Feds have been implementing, they are definitely over tightening, right? And we could see it in the data, right? We constantly talk about this, and I break this down, that it takes about a year for the economy to feel the pressure of the previous rate hikes that have been done. And so we're approaching that time period now. And so we're seeing inflation is cooling off, which is why I expect that the inflation report, the CPI report that comes out Thursday, is most likely going to come out positive. Now, am I 100% guaranteeing that? No, I don't have a crystal ball, but it most likely is. Now, going back to what he said, speaking about John C. Williams, he suggests that the rate cuts might be necessary as early as the start of 2024. Now, this sentiment is noteworthy. As I previously highlighted, the Fed's stance appears fragmented with inconsistencies, right? We've seen how other individuals that are part of the FOMC disagree. Well, they're like, hey, we need to continue tightening, and we actually have to continue hiking rates, and we shouldn't pause, right? So we see that there's definitely a disagreement with the Feds. Now, I know you guys might be wondering, Justin, why are you talking about all this? I want to listen to Tesla stock. Oftentimes, when I talk about Tesla, one of the things I mentioned on the channel is that you can't just look at the fundamentals and the technicals of, just a stock. You have to have a holistic approach when it comes to trading and or investing in the markets. And so this is why I pay attention to a multitude of different data points. And so what did we have this morning? So let me go ahead and share this with you guys. So this morning, one of the things that we saw was we had the National Federation of Independent Business Optimism Index. And so we came in actually higher than what was expected. Now, this is good. However, one of the things that you'll notice if we actually parse through the report is that we're still significantly lower in regards to how business owners. By the way, if you don't know what this index is, it's basically a survey for independent businesses on how they are viewing the economy, what are things that they're seeing. There's a few questions that they ask them, and so we're seeing that there is some optimism coming, but it's still at historical low levels, which is obviously not good. Now, along with that, at 8:50, now this was at 6 a.m., right? So let's go ahead and kind of go back into the overall S&P 500 and look at 6 a.m. Let's go ahead and kind of scroll in. Pretty much at 6, although we had a positive report, we saw that the market continued selling off. And so one of the things I try to explain when it comes to these reports, these economic reports, or even earnings, is that there's a lot of nuance to it. It's not just, oh, did a company beat its earnings or not, right? Otherwise, why would we see, for example, when Tesla, let's go ahead and look at Tesla. When Tesla beat its earnings, we still saw Tesla sell off right here in this big candle. Why? Well, we saw that profit margins, right, excuse me, have compressed, and that's not good, right? And then, of course, there was other things such as forward guidance from Elon Musk. But let's take a look at Apple recently, right? Apple recently had their earnings, and they beat earnings, right? They beat earnings, but there's a lot more nuance to these reports. You have to look at things a lot more deeper. You can't just read the headlines. The headline said Apple beat its earnings. Well, Apple sold off as well, because if you actually parse through the earnings, they're doing pretty bad in regards to selling the new iPhone, right? Now, makes sense considering that, even if you ask any random 14-year-old teenager, if she wants a new iPhone, and these days, people are just not as interested, right? So anyways, one of the things I say is that there's a lot more nuance to these reports, right? And so even though the report for the National Federation for Independent Business came in positive, it's still historically low. Markets obviously did not like that, right? But going on to some other data that we saw today, or some other news, at 8:15, right? Now here's something slightly different. We had Philadelphia Fed President Harker speak. Now, what are the things that he mentioned? Well, he kind of alluded to the idea of a pause, right? Now, so kind of agreeing with the statement of yesterday with John C. Williams, right? And so when he spoke at 8:15, we see the market slightly pushed up afterwards, right? And so, there's definitely a reasoning as to why I look at all these different data points, right? There's things that move the markets, yet we ended up selling off, right? And so one of the things I've been pretty much saying to the Push and Profit private group is that, let's go ahead and scroll back here. And I know I'm kind of all over the place. I'm not as concise and really as organized as I typically am, but hopefully you guys stay and really extract some utility from this video. But one of the things I've been saying is that, hey, we have the, CPI report coming out Thursday at 8:30. And it's most likely that we're going to see the CPI report come out positive. Why do I say this? Well, if we take a look at the previous CPI, or just inflation rates, we see that inflation has been cooling off. We see that we're at 3%, which is close to the 2% target that the Federal Reserve keeps preaching about, right? Remember, they have a dual mandate, right? Price stability, but also having maximum employment. Now, one of the biggest fears when they first initially started hiking rates was the fact that unemployment was going to increase rapidly. Yet, one of the things we've been seeing in the recent job reports is that unemployment is still relatively low. And a lot of these companies are still hoarding their employees, which is, pretty good, right? One of the things that we're seeing, though, is that they're giving their employees less hours. So they're keeping their employees, probably because it was so difficult to attract talent to these companies during or after the pandemic as well. And so one of the things we're seeing is, the two members of the FOMC are saying, hey, if the data comes in that inflation is still cooling, well, this is pretty much the idea that we're going to have to start pausing and then in 2024 start cutting. Now, the markets most likely are going to react very positive for that. So that's why I've been telling the Push and Profit private group, these are fade to rally types of days, or they're moving sideways. And we see that even though Tesla stock is moving upwards, we still have the market open for about 30 minutes now, right? We still have the markets open, but even if Tesla still moves up, we're still closing lower than the close of yesterday. So in fact, if you're looking at it from a daily perspective, Tesla is still falling down, right? Now, one of the things I've been saying is, yeah, we took an advantage of Tesla falling down for quite a bit now, but we want to go ahead and also not only just take advantage of the selling pressure, but take advantage of the bounce. So once we have this positive, if we have this positive data, right? I can't talk in absolutes. We have to wait and be data dependent. If we have this CPI report also show that, inflation is cooling off, well, this could spark a little bit of an uptrend for not only the overall market, but also Tesla. And so this is a good opportunity. Now, does it mean that Tesla is going to break above and continue to go up and make all-time highs? I doubt it. Now, it's not out of the question, right? You can't talk in absolutes when it comes to the overall markets, because at the end of the day, anything can happen. And I know some individuals don't like that I always often provide a bull case and a bear case. In fact, someone commented on that on yesterday's video. Hey, you're really just talking and you're not saying so and so. And I told them that unfortunately, I don't have a crystal ball, right? And I was rereading this book from Ray Dalio called Principles. It's absolutely a phenomenal book. I recommend everyone read it. And he mentions that you can never have an absolute view of the markets as there's so many different shifting variables, right? And this is why I say you have to stay data dependent. So for the individuals who are mad that I'm not telling you guys, hey, Tesla stock is going to be $623.45 on August 9th of 2027 at exactly 3 p.m. I'm sorry, this is not the channel where I'm going to provide you a crystal ball like that. If you find someone else that does that, then absolutely go ahead and watch them. But I try to provide, good scenarios, or at least in my opinion, scenarios that keep us really focused on what's currently going on. And so what we're currently seeing is, we've seen a lot of selling pressure for Tesla, but I do expect, as we have positive data roll out in the next coming days on Thursday with the economic report of the CPI report, we could see a little bit of a push. But we still have this descending trend line that has been presenting itself as a resistance for Tesla where, quite a few times we haven't been able to break above it, right? And so I don't think it's very possible that Tesla is going to break above this area. And then going forward, looking at a bigger time horizon, right, kind of zooming out for the markets, one of the other issues I see is that because a lot of these companies are still hoarding employees, there's only two options that could possibly happen, right? And they're both not good for the overall market or Tesla, right? And I know that's unfortunate, but I am still bullish on Tesla in the long term. I'll go ahead and talk about that. But the two scenarios, right? Well, a lot of these companies that are hoarding their employees, they could either, cut their employees, right? And that would increase unemployment, and that could trigger the recession that we haven't had yet because the labor has been so strong, and that would obviously hurt, consumer spending, which would bleed into corporate profits, and that wouldn't be good for the markets. Or we could have the scenario where these employees keep their employees, right? And that would be more favorable as we wouldn't have a recession. But the problem is if we have a lot of these companies keep their employees, well, that's going to severely still continue to hurt profit margins. And so one of the things I've been saying is that in the next earnings quarter, right, the next earnings season, we've seen a lot of these companies hit and miss, but the next one is going to be much more tougher. We're going to see a lot of misses. And in fact, we've seen, a lot of these companies that, beat their earnings. It doesn't really mean that they beat their earnings like Tesla and Apple and all these companies, because we've seen revisions for earnings compress so far. See, what happens is companies kind of give out hints of what's going on with the overall environment in their business, right? And these hints tip analysts where they readjust their expectations. And so already earning expectations have been revised so far down that when a company beats its earnings, it's not that much of a significant event as it was expected. The earnings were revised so low that, okay, they beat their earnings. Another issue is, let's go ahead and look at the QQQs. So we're seeing that the overall NASDAQ index ETF is dipping down. We've seen that there has been a huge rally for the overall tech sector, right? Especially after really taking advantage of this AI buzzword or AI hype. And it's been really good. But the problem is when you have a lot of these companies rally up a significant amount, it becomes harder to live up to the music, right? You have to hold up to the valuations. For example, if a company is trading at $520, right? But then the earnings come in and it kind of suggests that the company really should be trading at $495. Well, yeah, if it's already priced in at this higher price, but it's kind of showing that it should be valued at a lower price, we're going to start seeing, companies kind of fall down. And so that's why I've been bearish in the short term. And I know a lot of individuals hate when I talk about Tesla being bearish in the short term, but they don't understand. Yeah, I am bullish on Tesla in the long term, right? I'm definitely bullish because when we look at the competition, like, for example, Lucid, they just had their earnings and my goodness, their earnings it was a disaster, right? We saw that they're actually losing more money than they initially expected, which is obviously not something good that you want to hear from a company. And the only good thing that we got from Lucid's earnings, and for those of you guys that may not know, Lucid is a competing EV, or I can't even say competing. It's another EV company, right? The only good thing from their earnings was their forward guidance that, yeah, they still continue to have their projection of about 10,000 vehicles being delivered this year, which is honestly not even that great of a number, right? Considering the fact that in a quarter, Tesla's doing a 250,000 vehicles delivered, right? And so, one of the things that we're seeing is that it's getting tough out there, but I do still stay bullish on Tesla in my long-term portfolio simply because obviously Tesla is still so far advanced. Even the legacy automakers like Ford and GM, who should have the infrastructure and resources to catch up to Tesla soon, still struggle to catch up to Tesla. And so that's why, these areas where we're seeing a lot of selling is honestly just opportunities to go ahead and take advantage of the discrepancy between price and value. Now, what have I been saying recently in regards to Tesla? So one of the things I've been saying is, yeah, we're going to see most likely a bounce. But one of the things I obviously want to continue watching when it comes to Tesla is to see if Tesla comes down to this low $200 area. Is it guaranteed it's going to touch that area? No, it's not guaranteed. But the reason I've been focusing on this low $200 area, and we have been falling down, right? Getting closer and closer, is simply because it's been an area where there has been a area of support. It's been an area of resistance. It's also an area where there's a lot of volume relative to price, so there's a lot of trading between buying and selling pressure. And so that's an area that you definitely want to look at, because if Tesla does, maybe go up a bit and then come back down to this area, well, you want to pay attention. Well, does Tesla bounce up from this area and confirm that the uptrend is here? Or does it break below and continue showing us that more selling pressure is going to continue, right? One of the purposes of technical analysis is not to predict the market. I think individuals who look into technical analysis, they get it all wrong. It's not really to predict what's going to happen, but it's really just to measure what's currently happening, right? Currently seeing there was a rejection and prices are selling off. I remember when I talked about a video of Tesla having their earnings and it was bad, and I was saying Tesla's going to start getting closer to that area of the low 200s, some individuals thought I was crazy, right? Now, it doesn't seem that far-fetched considering that we're already at the mid-200s. Now, guess what? Around this area, there's very little volume relative to price. And so once we do bounce up a bit, and then if there continues to become more selling pressure, well, around this area, if there's not a lot of volume relative to price and there's selling pressure, well, we could see the price capitulate and quickly go to that low $200 area, right? And so that's why we want to pay attention to a lot of the different variables when it comes to technical analysis, fundamentals, macroeconomic data, even alternative data. In a previous video about maybe a week and a half ago, I showed several politicians have started shorting the market. Now, that's something that you want to raise your eyebrow to, because obviously a lot of these politicians, they have these salaries of maybe $150,000 a year, $200,000 a year from the government. Yet when you look into their net worth, they're worth, hundreds of millions of dollars. Now, you tell me, how is it that someone goes into office making this salary but then making hundreds of millions of dollars? Well, I'll tell you, especially like individuals like Nancy Pelosi, who, they have a huge influence on, policy making and just what goes on from fiscal matters, right? But then they're still able to have relatives trade in the overall market. Well, of course, they have this huge insight. They say it's not insider trading, but whatever you want to label it as, it's definitely a huge advantage. And so when you see a lot of these politicians, especially, Nancy Pelosi and a few others, start selling and shorting the market, well, that is, something to cause some eyebrows. Not saying that they hold the crystal ball as well, right? They're still human, but it's definitely something to be aware about. So overall, I do think that in the short term, we're going to have a little bit of a bounce, but I don't think it's going to be something that's going to be so significant that we continue to, go up higher and make all-time highs. Not likely. I think we may bounce and then continue selling off. That's my overarching view. And so in the case of my short-term trading, I will take advantage of Tesla going upwards, but once we start reversing, that will be another opportunity to start, taking advantage of the downtrend. And once we reach around this area, if we do, actually, let me correct myself, if we do, that will be an opportunity for me to buy in my long-term investment portfolio. But with that said, I do have to head out, so I'm going to keep this video very short and sweet. And with that said, hopefully you like this video. Make sure to like and comment, subscribe to the channel, and I'll see you guys on this next video right over here. Take care, guys.